If you are currently considering your next investment opportunity, then investing in our Brighton property development project may be the solution you're looking for. We've secured a development site at 17 Hall Street in Brighton, a well-positioned corner block that's 750 square metres and only minutes from the beach. We're converting it into 3 luxury homes with high-end specs. 4 bedrooms, underground private parking, private pools, rooftop terraces with amazing views. This is a wholesale investment opportunity with a limited capital raise. But for the few investors who make it in, we are offering a targeted return of 35% over the term of 2 years, with an annual coupon of 5%. The question that's probably at the top of your mind is, what are the risks? And considering the current mid-COVID environment we all live in, it's understandable that we are all a little more risk adverse than we normally would be. So I'm going to quickly run through some of the risk involved with this opportunity and explain how we are mitigating these risks. Firstly, there's a planning risk that we may not be able to get the permits. We mitigate this risk in a few ways. We have extensive experience in property development, so we know what the legal requirements are, but we also consult with local experts who have experience with the approval authority who has jurisdiction over the development site. In this case, that's Bayside City Council. We like to push the boundaries a bit to make a superior product, but we are going to make sure our designs are acceptable before we go to council for permits. Secondly, there's a sales risk. This project is only profitable at the end, once the properties are sold. So how we sell is incredibly important. So important, in fact, that we've made an entire video explaining how we sell our development properties. You can watch it on our website or social media. Thirdly, there's a construction risk. What happens if the builder goes bankrupt? It's happened to us before and it's not fun, but we managed to complete the project anyway, paying out investors 42.5% after 37 months, and we learned our lesson. Which is why we always use fixed price building contracts, and we only appoint builders with a proven track record and who have a solid financial position. We also obtain personal guarantees from the directors of the building company and take out insurance policies. The chance of the project failing entirely is actually very small because we have such robust risk mitigation measures in place. A more likely risk is delays, which do happen in property development. But if a delay does occur, we have a delay compensation clause in our investment agreement, which means that the investors will be additionally compensated if the project does go longer than we anticipate. Of course, more details about risk mitigation strategies are available in the information memorandum for this offer. So if you'd like access to that document or to discuss this offer in more detail, simply send us a message to get started.